So look, there's no easy way of saying this. If you're an investor into Bed Bath & Beyond, you need to tread extra carefully in the coming months. There's two big warning signs that came out last week and have seemingly been swept under the rug by all the meme stock community. Nobody on Twitter and nobody on YouTube talked about these big issues that's happening right now with Bed Bath & Beyond. It's important more than ever investors trying to play these short squeeze in Bed Bath & Beyond know the real risks. So that's why I'm here giving you a little dose of reality. Now, the second reason is the big issue I have with Bed Bath & Beyond, but first let's cover the first one because it was spun as seemingly good news. Last week, Bed Bath & Beyond told its suppliers in a video conference call that the company would be paying them in advance or upon delivery, which was spun as good news because it's an attempt to woo back its product providers. Typically, when you buy products, you get an invoice and you usually have a couple of weeks or even a couple of months to pay said invoice. So with Bed Bath & Beyond paying them in advance or upon delivery, this could be seen as good news. A good reason to restart your business with the massive chain itself. But this actually is not that great. In fact, I'd say it's arguably very bad. First, if you think about it, you step back and you look at it. Yes, Bed Bath & Beyond now have some cash to pay for the products up front. Nice. But the big issue really here is, how did this company get to a level where they're ordering in stuff and couldn't pay it on a monthly invoice as an example? The fact that they even have to woo back suppliers is kind of amateurish from a big company, and in fact borderline immoral. I would also probably think that if you were a supplier into Bed Bath & Beyond who've been waiting for months on months to be paid for stuff you've already delivered, it's gonna leave a bad taste in your mouth. And if you were a supplier to Bed Bath & Beyond and maybe still haven't been paid, maybe you would be sitting there thinking, why would I continue operations with this business? Why, after all, take the risk? Executives from Bed Bath & Beyond told suppliers on a recent call that they intend to use the funds raised from a recent equity offering to get more products into the company's stores and their empty shelves. They elaborated saying that these shelves have been sparse because Bed Bath & Beyond has been struggling to pay its manufacturers. The interim chief financial officer, 𝐓𝐻𝐿, did however state that even this impact of paying in advance won't have an immediate impact. Bed Bath & Beyond did secure its short-term financial future with a recent equity offering, which will allow it to potentially raise $1 billion. Holly also stated that while we think this will be the necessary funding to fund the turnaround, it isn't all here right now. Holly continued, it came in a small amount up front and then $100 million a month over the next few months until we get up to a committed amount. So it seems that Bed Bath & Beyond has secured its funding, at least for the coming quarters, but there is still big issues that remain. Trust with customers has been shattered, let alone investors. Trust with suppliers is still walking a tightrope. But even if somehow Bed Bath & Beyond, this plan works and the suppliers come back and the customers come back, there's still huge issues with this business. In fact, the legendary short seller from the famous film The Big Short, Michael Burry, has expressed his concerns. Burry recently put out a tweet saying, "It's time that the memesters looked up what a death spiral convertible is." Now, many of the Wall Street Bets faithful, who have probably already disliked and clicked off this video claiming it's nothing more than FUD, have seemingly ignored this stance. But if you've made it this far and you're still a memester, I implore you, listen to what Burry is saying here, because he's absolutely bang on the money. Now, what is a death spiral convertible? When companies find themselves drowning in massive debt burdens, a death spiral convertible may be used as a last-ditch attempt to save the company from utter sheer bankruptcy. And this type of hybrid raise of capital and sort of last-ditch attempt at saving yourself was very popular in the 1990s. It did, however, go over a different name back then of a flawless convertible. Now, a typical convertible bond, not the one we're talking about here, is a piece of debt issued by a company that pays regular interest to the holder. Usually it's fixed at certain points throughout the duration of life from the bond itself. However, sometimes the bond holder may opt to convert this cash dollar amount into a fixed number of shares that the company is issuing. For example, rather than pay back a dollar amount, you might pay back a certain fixed amount of shares instead of actual cash, and the person who is lending the money will be able to cash them in whenever. Now, this is where it differs, because the so-called death spiral convertible bonds differ from this typical mindset. Instead of converting their bonds at fixed prices and fixed amounts of shares, death spiral bondholders can convert their bonds into a variable number of shares based on the dollar amount of value the stock is trading at. Now, that might sound confusing, but this is basically what it means. With the traditional sense, you get back a fixed amount of shares. It doesn't matter what the price is, you just sell them at the market. With this death spiral variation, what it means is you have to pay back in shares a certain amount of dollar value. So basically, if Bed Bath & Beyond was trading at $100 and you needed to pay back $1,000 worth of stock, you'd only need to dilute $10 at the market. But if Bed Bath & Beyond was trading at, say, I don't know, $10, then all of a sudden you don't have to give back 10, you have to give 100. I hope that math adds up and makes sense. I'm recording this on Saturday morning and I might have been drinking yesterday. But long story short, basically what it's meaning is if the stock falls in value, more shares are going to be added to the market, meaning more liquidity is needed to actually send the stock to the moon. If the stock price is lower when the repayment is due, then more shares have to be issued than expected initially when offering the bond itself, meaning it's dilution on top of scheduled dilution. When Michael Burry put out this warning about the fact that Bed Bath & Beyond is in desperation mode to gain funding to survive, it's ultimately the perfect candidate for a death spiral convertible situation. Now, according to Bed Bath & Beyond, in their own words, the company plans to raise $225 million from the new convertible share offering. Now, these could potentially convert into 38 million shares, which in other words is about 1/3 of the total shares outstanding for Bed Bath & Beyond, meaning there's going to be 30+% dilution on the current shareholders. But it gets worse, because the company is also expecting to raise an additional $800 million via warrants and contractual agreements to convertible shares at a combined price. Now, as it stands, most investors into this business who are holding it long or short term are hoping that the short squeeze will happen. Retail investors and memesters have held strong. In fact, thanks to Stock MVP, we can see that they make up over 50% of total ownership. But here is where the issue lies. If they dilute you just the 1/3 that's planned of the float, then retail investors basically need to pick up this slack. In this heavy inflationary market we live in, retail investors and people who want this short squeeze to happen will have to buy 1/3 more to just stay at the same level when this dilution comes. And I'll be honest with you, I don't think they can afford it. And the ultimate reality is, if they don't buy this and then the other planned 800 million dilution too, well, it's gonna fail. And Michael Burry is gonna be bang on with his prediction, and it will come true, as this company will spiral down to the pits of hell. For me, bankruptcy is still very much on the table at the back end of 2023. Bed Bath & Beyond have secured their short-term future, but the problems still do persist. Now, a takeover might be possible if they can sort of get customers back through the door, but that still remains to be seen. Right now, for me, Bed Bath & Beyond stock is just simply a trader's stock. It's a short-term trade, and anytime retail investors come into the market and start trading, well, we know how it ends up. Majority of them lose money and end up serving you at McDonald's.